Hey everybody, Jim Ingersoll here with a great guest who you're going to absolutely love. Thanks for tuning into the Real Estate Success Podcast. I hope that your deals are going great. You're creating cash flow and long-term equity for your family. Today we're going to talk about making the leap from single-family homes into multifamily. And you're going to absolutely love getting to know my guest today, Vinney. We have so much in common. We've never met in person, but we've both been married over 30 years. We both have 2 kids. We both have a friend named Bo Eckstein. And Vinney, welcome to Real Estate Success.
Thank you so much, Jim. It's such a pleasure. I'm very excited to be with you, and hopefully I can add a little value to your audience.
So I love that you smile so big, and that's like your nickname. So tell me about your smile.
I don't know how, but I started smiling when I came into this land of opportunity with $7 in my pocket. That was when I came into Washington DC, went to George Washington University to do my MBA. I'm an engineer, mechanical engineer from India, worked in Bombay, but I always wanted to come to USA for my further studies. And it just so happened, I sold encyclopedias. I sold door-to-door Bible books, encyclopedias, and I was smiling. I just said, people couldn't understand me that time, a big, thick accent. And somehow my teammates, when they started giving me plaques or trophies, because I was kind of getting a little bit good in sales, they took my middle name out, Kumar, and put Smile in there.
Love it.
They said, you smile a lot.
I love that. Smile is a beautiful gift to give. And we both have advanced engineering degrees. And now we both love to engineer real estate. So we have that in common as well. I love it. You have a beautiful smile. Let's go back there. Like when you arrived in Washington, DC, what did you do first? Like, how did you end up selling encyclopedias? And then how did you transition all that to starting to do some real estate?
Totally, Jim. What happened was I just arrived, I know within 3 months or so at George Washington University. My friend, another Indian friend, Y.K. Agarwal, he may not even remember me, but I remember him. He was the pivot point. This is 43 years back now. And he says, Vinney, what are you doing? Vinod, my real name is Vinod, but I go by Vinney, V-I-N-N-E-Y. And he says, what are you doing for summer? I said, I don't know. I just arrived from India. He says, well, I sold these books, door to door and made some money. Would you like to come with me? I said, okay. I just took the chance, and rest is history. I was knocking on doors outside Atlanta, Georgia, then Pulaski, Virginia. Second summer, I came back. And then third summer, I was outside in Aiken, South Carolina, and Augusta, Georgia, selling books. And that converted me from an engineer into salesperson. I said, oh my gosh, I kind of like it. I like to talk to people. That. So I put my engineering in a little box and got into motivation speaking, selling, marketing, things like that.
Wow, that is amazing. So when you first started knocking on doors, were you nervous?
Very nervous. Yeah. Very nervous. I mean, I was walking. I didn't have any car. I didn't have any bicycle. I didn't have nothing, right? I had just come from India with $7. And oh my gosh, and my uncle helped me some because I lived with him in the Rockville, Maryland area. I thank him so much, for giving me a start. But then I remember him giving me few checks, 2 checks maybe with signed. He says, when you are ready to come home, just let me know if you're putting $500 or $1,000 or $2,000 on it, cash it and come home.
Oh, wow. And you never went home, did you?
I never did. In about 10 to 15 days, I remember calling him from public booth. We didn't have cell phones.
I remember the day.
And I said, Uncle, I'm tearing off these checks. Literally. I said, I've got $1,000 deposit in my pocket because we would take orders and collect some down payment, we called it at that time. Yeah. So if the family wanted like $100 worth of books, we'll ask them to give us $40 first. And then when we deliver the books, we'll give them collect the $60.
So when you were done at George Washington and you had your advanced engineering degree, did you go into industry and work as an engineer then, or did you stay?
I really did not. I really did not. It's just amazing. I did MBA. It took me 2.5 years, by the way,
Yeah,
because I had to do a lot of prerequisites,
I'm sure.
and then I graduated. And by that time, I had done 3 summers with the company of selling encyclopedias. I brought some more people in next year and next year. And I said, you know what? Let me see if they have some position for me, their parent company. And Jim, you would not believe it. God was for me. I talked to the president. I had so much confidence. I called him and I said, Mr. President, I would like to interview with you for a full-time job. And the rest is history,
That's
and
amazing. So how long did you stay with that company?
long time. Oh my gosh, 37 years.
Oh my goodness.
37 years. I was a consultant, promotional consultant, then regional manager. Then they are the ones who moved me to California to open up the whole division. Within a year and a half, they felt like I was kind of progressing, all right, in Ohio. So then they moved me over here, and we had just gotten married. We've been married 39 years.
Yeah.
So we had just gotten married. We're going to buy a home, small home in Bowling Green, Ohio, out of any place, and the rest is history. We came to Bay Area, and that Bay Area also, Jim, my president was sitting with me like at one night. We were looking at the map of the whole USA. I happened to be near to San Francisco side. He was on the Los Angeles side. So I looked at it. I said, oh my gosh, looks like Oakland, San Francisco, and San Jose, 3 airports. I think I should move there.
And you did. And then how did you come to the point where you could leave that job? Were you starting to dabble with real estate, or what kind of drew you to real estate? Where did you hear about it, and how did you figure it out?
That is so good what you're asking, because the company you keep, the peers, it's good to really talk to and listen to, what they're talking about, right? You want to learn from them. And that's what happened in the California area, in the Bay Area. My friends would keep on talking about real estate, So then we started saving money and bought a lot of single family homes, by the way, all over, in Georgia, in Arizona, in Texas, in California, all over. And then we found out, this is what happened for about many, many years. And my consulting was motivation speaking. I was busy for about 4 months in a year. Oh my gosh, 4 months, very heavy schedule, but 8 months, I could dabble into different things. So that's what I did. I would take some time out and got into more real estate like that. But then in about 2000, early 2000, I became broker. So I'm a California broker now, by the way.
Okay. Excellent. So now we're up to the year 2000, and you've been buying these single family homes, and you start to realize that you can't build cash flow fast enough to retire in the Bay Area. Is that sort of what happened?
That is so very true, Jim. I found that the homes were okay, and I could not manage because I was working with the company. So I would hire the management company in Arizona, over there in the California region, all that. So the cash flow was not there. I mean, that's the key. And if something went wrong with the roof or the appliance or, some dishwasher or this, there goes my profit, So that's what happened.
Building it up at a couple $100 a month wasn't building it up fast enough. So then,
not at all.
Tell me about your very first apartment deal.
I would say I bought the first apartment deal, 14 units, 14 units. I became broker. I had a decision to make. Should I go in the residential or commercial? And I always have thought big, Og Mandino, Magic of Thinking Big, W.J. Schwartz, Charlie Tremendous Jones, Zig Ziglar, all the best people, Tom Hopkins, all the great mentors, and Napoleon Hill, all those people, right? They shaped me quite a bit. And then I said, let's go big. So that's when I was introduced the word syndication. I said, what is syndication? I didn't know anything about it 12 years back. And I dug more and more and more it made sense as an engineer, you and I, say, oh, I have limited money, but if I can get more money from my friends, family, people that I know, and I can invest it legally in a nice, bigger apartment, I can buy bigger, 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 bigger. So 14 unit was 180,000.
Uh-huh.
And if I can say, I don't want to brag about me, but we just closed $52 million deal last week.
Can you even believe it? I mean, you came to this country
cannot.
with $7 and you just closed a deal that big. Does it blow your mind?
It totally blows my mind, and I do want to say in the podcast, it was half and half. My another partners, Enzo Multifamily, very nice people. My company's name is Monil Multifamily or Investment Group. So we did half and half. So 26 million. We each raised 8 million within 1 month. Oh my gosh. So we are able to raise lots of money now. Our, the investor base has gone for me from zero investor about 10, 12 years back. I didn't know nothing about anything. I didn't know NOI. I didn't know what cash and cash was. I didn't know how to put a letter of intent. I didn't know nothing. But now I'm teaching people. It's amazing.
All right, so yes, you are, and you've got some stuff coming up. And your brand new book, by the way, congratulations! Apartment Syndication Made Easy is on Amazon, and you can get a link below this podcast today as well. I've ordered your book, but it hasn't arrived yet, so I haven't read it yet. But I will read it, and I will leave you a review.
Please, yeah.
Let's talk about that process there, because I mean, as an engineer, we're trained to think almost like in algorithms. And so let's talk about trying to make that process easy enough so that our listeners today can understand it. So how do you find and evaluate a multifamily deal? What's the best way to do it?
Very good point. Very, very good point. Jim, I would say even to start before talking to brokers in different pockets, I talk a lot about emerging markets. And the thing which has really helped me, I've done 27 syndications in the last 10 years till 12 years. And they have been going after jobs. So I would like to make a premise on that. I also have an ebook. If any of your, audience, listeners would like to text me or anything, we will give them the ebook, just mail them to them, how to determine emerging markets. That's a very good thing. So when we started in business, we were looking for where the jobs are coming, where unemployment is the lowest. That's the word. Unemployment is the lowest and more people are coming in there, right? Because apartments are only good if they're occupied. Right. 100%. So the logical mind just got me going on that end. That's why we went to Odessa, Texas, out of anywhere. We live in the Bay Area, but in the reports, it said Odessa, Midland was having the lowest in the recession. We started our business in recession. Employment rate was. We just rushed there, went and talked to some brokers. That's the key. You got to start building relationships with the brokers and of multifamily units. If we are buying 8 units, 12 units, 15 units, or like that, we need to talk to the brokers in that range. Don't talk to the brokers who are selling 200 units.
Right.
They will not give you time of the day at all.
Right. All right, so identify your market.
Yes.
And then do you like to invest in apartment or multifamily that has fixable problems, value add, or do you just like to look for a steady cap rate that's unlike a cap of 3 in the Bay Area? How do you like value add, fixable problems, fair cap rates? What do you like to get?
Good point. Jim, I would say people starting out should look into C class. C class are the cheaper, not the Ds, A, B, C, D, right? So Ds are where kind of iffy areas, hard to collect rents, things like that. I have never invested in those. In these 27 syndications, we have never gone there because you have a fiduciary responsibility to take the investor's money and you are guarding their money. That's the preservation of capital and then giving cash flows, right? So we actually have been in the C, C plus, B minus areas for a long time.
Yep.
But the one we just closed, 52 million one in Orlando, Florida, it's a beautiful property. It's like a resort,
Yeah.
324 units. People love it. It's been 95% occupied, 98% occupied. Always. There is a value add function also. We'll be putting valet trash, parking, and there is loss of lease. I'm saying all these terms, but there is a rental difference in this community of 150 to 175 per month. So we will burn that. We call it, we'll increase the rent.
Right.
The value of that 52 million will go to 59 million within about a year or a year and a half. But let's go back to early days of mine, right? That's where majority of the people will be starting. Cap rate used to be 10, 12 when I bought it there. But then the cash on cash, which is again a very good term to look at, is where I don't give too much credence to cap rate when I buy, but I look for cash on cash returns right now and in the future. How much it's going to take us to buy the building complex, and how much is it making per year on a yearly basis. So that's the key factor, you know.
Mm-hmm.
But we do look into giving value to the residents so that we can increase the rents. That's the key thing.
And when you, I mean, that, and then you get that little bump in cash flow, but it
Yes.
really jacks up your equity based on the cap rate, right? Which
Yes.
is, I mean, that's how you're adding 7 million to the one you're doing right
Exactly.
now. That's the point I want to make sure all of our listeners understand in multifamily is just, if you're always buying $70,000 houses, just add a couple zeros. Don't get scared. Just go from 70,000 to 7 million. It's okay. Vinney said it's good. He's got a smile. Get over fear. I think some of it's self-limiting beliefs and fear, Vinney, but think of how much faster you can grow your equity in your legacy and everything else if you just add 1 or maybe 2 zeros onto it.
You know, you're so right about it, Jim. My coaches told me that I invested in my learning this art of syndication business. And that's what they said. They said, Vinney, if you buy 20 homes, all scattered all over the place, you have 20 roofs to take care of, 20 different problems, 20 tenants at different places, but 20 different transactions also for buying, qualifying for the loan. But if you buy 20 unit apartment, it's one transaction, maybe 2 or 3 roofs to take care of, and you can collect the money in one place with having a part-time manager or things like that. That really stayed with me, you know, just like you said. It's extra zeros. But the thing is, one more point I would like to mention to your audience, it's much easier to qualify, by the way, for 20 unit apartment complex rather than going 20 houses. Well, there was limit of 10. I remember now, I don't know what the limit is, but please dabble into it.
So I think, and I can imagine our listeners right now are saying they would love to do this, but oh my gosh, Jim, you make it sound easy, just add a couple zeros, but how do I finance that? How do I get the down payment? Because my commercial lender says I need 25% down, and do I really need to get a fund? Do I have to hire a securities attorney? I mean, what do I do? And then they start stressing and they don't pull the trigger. What do you say to those folks? I mean, how do you sort of put those pieces together and learn how to do that?
You know, I'm so glad you said that. I don't want to put a plug for my book, but that book for 99 cents will teach everything that I have put together in 12 years. That's my main thrust is I don't want to make money in the book, but I want to spread the knowledge. And that book takes you in a very simple way, 5 different plates, how to syndicate and do what I do. And also the paperback is, we are putting half price now, you know, just so that a lot more people, I sold like 1,100 books in just 7 days, 7 to 10 days. Got 58 reviews, 5-star reviews, you know.
I saw that. That is a lot of reviews. When I read your book, I was shocked.
I couldn't believe it.
Vinny, you and I are both authors too. I've written 2 books.
Oh,
also.
Really?
Yeah. But I can tell you, I know how important those reviews are on Amazon. 58 five-star reviews is not easy to get. So congratulations.
Oh my gosh, it totally blew me away. I
Yeah.
couldn't believe it. My wife looked at it and, she says, Vinney, you wrote a good book. I said, I might get 3 reviews. Nobody's going to look at it.
Amazing.
But thank you, Jim. But that will teach, audience so much. It's all in very easy. I shouldn't say it's easy. It's never is easy. Who I am today, it took a lot of effort, right? And that's what I feel. Let's start small, because there is $26 trillion with a T in retirement funds with a lot of, people in USA alone, 26 trillion.
Yeah.
And a lot of money is in the stock market, in mutual funds. If we can just share with our friends and family and neighbors that you could convert a small portion into self-directed retirement plans, it's called,
Yep.
then they can invest in real estate. So even if I had zero money, by the way, we didn't have that much money, but that's when I got my friends involved, and very big.
I love leverage, and I love self-directed IRAs. I absolutely love them. I think they're a huge opportunity for all real estate folks. You can leverage with OPM. Tell me a little bit about your academy. Like, is there one coming up?
Okay, my academy is online. I have lectured 722 lectures now. It's multifamilyacademy.com. It's online at Kajabi website, where our students can, they can just, for a very small cost. A lot of other coaches are charging 10,000, 20,000, 50,000 to learn what I'm teaching, to be truthful. But I give everything away for $1,500 or $2,000. And the good part is they get all my templates, all my PowerPoints, all my underwriting tools, and in video lectures, myself teaching them at their own pace. That's the best part.
With a smile.
Thank you. And then the best part is, for a very small amount of about 3,000 to 4,000, I master coach also. They can come into my coaching every week, and then they can ask me questions and everything. And, there are people from all around USA and even the world who join now. So I appreciate everybody who is following me on Facebook, Twitter, Instagram, YouTube, things like that.
Well, you've got a good platform. Let me ask you this. If you for somehow the market crashed, you lost everything, and you had to start over with $7 again, could you do it a lot faster this time?
You know what? I sure can. And I can tell you why. My new company is only 4 years old. Even though I've been in business for about 10, 12 years, I had a partner that I started with. We did 14 syndications. It took me 6, 7 years to do those. But then in 2 years, I did 10 syndications. Wow. So it's the comfort that you get. And once you learn the principles, you can duplicate them again. One thing I wanted to mention was, Jim, apartments, US, and I have graphical knowledge. Anybody can look at, more and more renters are getting, millennials, Generation Y, they are not buying homes that much. Sorry to say that, but they are going to be needing shelter. Economy downturn actually helps apartments. It's amazing, because when people lose home, they have to have shelter. They go into B class or C class apartments. When the jobs getting crunched up with the economy, when the office buildings, I'm just thinking about the downturn coming. We don't know when it's going to come. It's been the biggest bull for so long, since 2008. That's like 11-year bull. Correction is coming maybe mid of 2020. People are saying, but I think if we can buy apartments in good growth areas, we'll be okay. We'll be all right,
I like what you said about millennials. I'm finding, I've been renting some apartments recently, and the people renting them are typically millennials. They have high income and they have credit scores over 700. So they would qualify to go out and buy single family homes if they wanted to, but they're choosing to rent, and they are fabulous tenants.
They are. They really are. They have the buying power. You're so right. I think millennials are wanting apartment complexes where there is a exercise room right there, sauna is there, steam is there, nice swimming pools are there, kind of like, and also valet trash. They don't want to take the trash to the dumpster. They'll pay $25. USB, plugs are there, granite tops are there, things like that, and also electronic things, the control, the nests are there, right?
Right.
So they are really into the new technology, and they like not to travel too far to go to work. So portability is very big for them, and a lot of them are telecommuting too. So that way they could go and move from one community to next community. So
Yeah.
those are very important things for us to look into. You're right.
So if one of our listeners right now is sitting on some single family and they're frustrated with their cash flow and the velocity they're able to add to their portfolio, and they would like to do multifamily, but they're just nervous or haven't started, what advice would you give them?
I would say please get a mentor, a coach. There are lots of them. Please go and search on Google, and if they would like to, please also text me, my company, and then pick up a book. I think my book will teach them so much.
Yeah.
It's an easy read. And then after that, they can make a decision, if they would like to do that. It's not that hard. Everything is hard, I should say. But the thing is, if you make up your mind, you want to scale up, there will be money flowing right around them. I recorded 57 lectures on just that one topic, OPM syndication blueprint. And that is amazing, because if we understand what's the psychology of the investors, we can really get them involved. They are busy professionals all around us, but they have a lot of money. And we can actually channel that money into buying apartments with them. They can become joint partners or syndication limited partners, passive or TICs. That's the TIC, tenants in common, things, some technical words, but it's not hard,
Excellent. All right, last question. You've written a book. You seem to love to read and write. Have you read any books recently, or one in the past even, that you would say this book really made an impact on me, Vinney?
If I may say, we all are salespeople. I mean, if we come to the nitty gritty, lawyers, attorneys, doctors, everybody, we have to sell. One book which really has affected me is by Tom Hopkins, How to Master the Art of Selling Anything.
Mm-hmm.
Which is an older book, but I go back to it. It aligns me, and it's got so many nuggets in it. So that's a recent book I just read.
I'm gonna go pick it up. I like some of those older books. I love Think and Grow Rich. I love it.
I love it. Love it.
Dale Carnegie, awesome book.
How to Win Friends and Influence People, the number one book. We have 4 copies. Yeah. Our kids read them. We had it in every room. Amazing. Napoleon Hill, Think and Grow Rich. Everybody should read it, definitely. And then, the key thing is we just need to make sure we do Miracle Morning. That's a great book also by Hal Elrod.
One out called Miracle Equation.
Yes.
Hal Elrod is a great author. I agree.
Yes.
And you mentioned Zig Ziglar. I just read Zig's son just came out with a new one. I think it's called Born to Win, which is really good. And Zig Ziglar has a documentary on Netflix, which I still need to check out.
I would love to. He's been my mentor. He didn't know. I saw him on the stage. I still remember that. He was 76. He had more energy than a lot of my speakers on the stage. I couldn't believe it. He was with that pump. Remember, he used to have that pump? He would
I'm the pump.
Yeah. Yes.
All right, Vinney, I've really enjoyed this. Thanks for sharing your story. It's very inspiring. And thanks for encouraging our listeners to make the jump to multifamily. Think big, guys. Get rid of all those self-limiting beliefs, add some zeros, and you'll be smiling like Vinney is. Vinney, thanks so much.
Thank you, Jim. God bless you, and congratulations on a great podcast.
And everybody, if you enjoyed this as much as I did today, leave us a comment, leave us a question. Follow the links below to grab Vinney's book, and I'm going to leave a link over to his other information on his academy as well. And if you want that report he offered you, take advantage of that as well. Get that emerging markets. It's really important. I believe it. And you guys are rock stars. Thanks for sharing this. Thanks for your reactions. Thanks for your comments and your reviews. Have a great day, Vinney. Thank you so much.
Thank you, Jim. Thank you.